man, what a year-ish. What a period in the industry. We kind of went from this, right? 2022, end of 2022 into the start of 2023 was probably one of the roughest times for the industry. For those of you who, some of you have been in the business as long or longer than me, 2008, I would say 2008 into 9 was, I guess, this bad, but I don't even know that it was, honestly. Like, there were still things working, because even at the worst, like at the bottom of the market in 09, there was a $15 million promo, right? I mean, like in March of 09, which is like the bottom of the market. So things were working there. They were just changing a lot. And so I don't know if this period may have been rougher. We had more layoffs in the industry than I remember back then, more times. The industry's kind of reshifted. And what I want to do today is, I saw Visual Capitalist. Jeff usually comes, he's not here. But a couple years ago when I did this State of Finpub, I mentioned that it's possible that the retail audience grows and the current FinPub models don't necessarily capture all of that growth. And I was reminded of that when Visual Capitalist put this out. Has everyone seen this by now? I sent it out. Like, this is crazy. This is what you expected in 2021. Retail flows into the market just exploded. But one of the narratives when things got hard was that, hey, what we had in 2021 was all these sports bettors. When sports went down, like in 2020, and like, you know, sports betting went away, all those folks came into the market, and there's truth in that. Like, we've seen that data. DraftKings CEO was like, hey, there's this huge crossover between the trading market and our market. But what's interesting is that they didn't go away. In fact, every year, like 2022 is a little bit down, but look at how much more engaged in the market retail investors were consistently. Like, this is a permanent, or at least a persistent shift in the retail investor audience and how they engage with trading and investing. Like, it's huge, right? And so today what I want to do is basically start a discussion with everybody about some reasons why that might be. And there's a lot of different views. I'm going to give you one of my views on this. And I'm going to start with the question of how big is FinPub's addressable market? What do we think is our market size? Is anyone? There's a number that's been floating around for a decade.
15 million.
Right, 15 million is what we've been saying since about 2012. 15 to 16. And there's some really good evidence of that, right? This is MarketWise's statements here. They had, at the end of 2023, the lead gen, was up 17 million free leads, about 750K paid. We've been saying there's about 15 to 20 email addresses floating around the industry, but we literally, that number goes back to before we started doing the summit a decade ago. And there's obviously some clear evidence that that's about where our market sits, because MarketWise, which separated out from Agora, for people who don't know, like, MarketWise was, we always kind of considered them Agora, and I believe when we talked about Agora being $1.3 billion, that included MarketWise at the time. And they've separated out, they've gone public, so they're a separate entity from the Agora ecosystem. They're kind of almost like a sibling rivalry kind of competitive ecosystem. But they are basically the industry leader now at this point because of the size. I think they ended the year somewhere in the 430s this year, I think, which is substantial, right? And this is their growth, right, from 2020 in terms of free names, which they started more lead gen. Porter Stansberry came and spoke last year, or I guess 2 years ago, because we had this, and talked about his experience building Stansberry. And there was a shift here to lead gen, but so we go up to 17 million names from about 5.8, 5.9 over this period of time. Part of that is the growth in the market. Part of that is, I think, the change to lead gen strategy. They peak at about 1 million paid, and they're down to about 740. So not terrible by any means, right? So there's a lot of, I think, a lot of evidence that that's about the right size of the market. What's interesting though, if you look back at history, and I'm going backwards to look forward, is look at, this is 2020, or 2000 to 2020. This is a demographic pyramid of the United States. This yellow bar is the baby boomer generation, okay? So in 2020, you have the baby boomers starting to move fairly strongly into retirement saving mode, which starts in the mid-40s usually, historically, into their 50s. You start really focusing on retirement because now it's like imminent. What we've seen over the last 20 years of the industry, and this is important even if you weren't here in the industry at this time, is the baby boomer generation basically doubling the retail investor possible audience, right? Like the generation itself was way bigger. Then you have a technological shift where we have online trading that goes from 4 million brokerage accounts in the US in 2000 to conservative estimate is 63 million. There's possibly more. You have some doubling of people have more than one account. I've seen numbers as high as like 100, but conservatively 63 million accounts. So 4 million to 63 million online brokerage accounts. So there's an explosion of customers or potential customers, right? From just the baby boomer generation. Like it transformed capital markets, right? It transformed our industry. Our industry back in 2000, we had a lot of benefits. You had the start of internet marketing, and in 2007, 2008, you had the rise of the social media platforms. The ability to market to whatever audience size you had really went up, but our actual market size also dramatically increased. So that's some huge tailwinds, right? And that's where we get to, like in 2020, 2022, 21, you have this boom all of a sudden, because COVID, I think it's a transformative event, right? It started a new behavior, and we saw the benefits, obviously. Like COVID was just, that was an amazing period, right? Charles Schwab did an interesting study on, they call it Generation Investor. About 10 million people started trading and investing in the COVID lockdown period, right? 10 million folks came into trading and investing. Now, that narrative that, hey, people came in and then they went away, FINRA pointed out that this was 2.5, 3 years later now, 23, that about 80% of those folks are still like actively investing in some form or another. So of the new people who came in. So there's this massive new market, and if you look at this median age, who is it? Only 11% are boomers, 50% are millennials, then they're, Gen X, and then Gen Z. How many people in the baby boomer generation do you think were investing when they were teenagers? Do you think it was in the millions? Probably not. Gen X? Probably not. Millennials? Yes. Gen Z? Yes. So the current numbers of investors in the US, 15% of retail market participants, this is from FINRA again, first began investing in 2020. Like 15% of the current investing base, like that's crazy. So what we had was a very, very transformative period of time that a generation of people who previously hadn't really been our customers or even available as customers got super engaged in some form of investing or trading. We have never, in the history of markets in the US, had this many active people in the space. So look at this. Gen Z, right? 56% had some form of investment, mostly towards crypto, but also stocks. For millennials, there's a bunch of stats, but this was really interesting just to understand the difference, right? 31% of that generation, not 31% of current investors, 31% of the generation started investing before they were 21, right? The oldest ones are 40, the youngest ones are like 29. Compare that to like 9% of boomers, 14% of Gen X. When I said a couple years ago that I said FinPub is going mainstream, this is kind of what it looks like. It's retail investors all the way down the demographic pyramid. And while there is a dip in for Gen X, it's a pretty thick stack compared to where the industry used to be, like say in the 90s, right? We've never had this many potential participants in the market, potential customers, than we have now. So here's a question for you. The Wall Street Bets community, which is bigger now than it was at the time, obviously was at the center of the news stories in 2020 when all this started. Now there are 14.7 million members, but only 3% of the Reddit platform are in the baby boomer generation, right? So do you think that, now these are not paid, right? This is not, I'm not saying that these are paid subscribers, and so there is a difference between a customer who has shown a penchant for spending money for information, but there are people who are actively seeking information, joining communities around investing. So do you think this is the same 14 million? Do you think that all 14.7 million of those are in MarketWise's file? I think probably it's a different market. So this is how I think of this. This is actually an adoption curve. This is where I think if you look at like from a macro view, where kind of each of these generations are falling in terms of active online investing and trading. You've got silent generation are already like very aged out of the customer base, and they're still active as investors, but they're not as big a piece of market by person. By wealth, they have more billionaires than anybody, but in terms of like the retail side of the audience, the baby boomers, by and large, still have the most wealth, like by a substantial margin. But the oldest ones are hitting 79, which is their average life expectancy. That market is very mature. The Gen X group, which isn't as big as them or the millennials, are smack dab in the middle of their pre-retirement saving years. They actually spend more money per person. They're actually even though they're a smaller generation, they're very, very big spenders, and there's like more entrepreneurs in that generation than either total, not by percentage, than either boomers or millennials. So, and then the millennials, I would say, they're in that early adopter stage. Like, this is the leading edge. Even the people who are young, who are getting in, like most of that generation hasn't reached their full activity in the markets. Whatever they're doing now, they're going to do more as they get closer to retirement, because that is the primary driver of all retail investing, is retirement. And then Gen Z is starting at a period when like we've never had that generation in there. So the other part of this that we've seen is obviously the crypto space, and this is an interesting thing about new investors in this space in general, is that they're just as likely now to enter the world of investing through crypto as they are through stocks, right? So that's like everyone who was here during the Forex boom, it was like Forex almost became a religion. I mean, you can see that with crypto too. There are people who live for crypto, and it's like, I invest, but I invest in crypto, not anything else. And so these dynamics are really interesting, right? Now, I'm not saying, I just want to be very clear on this, like, I'm not saying that there is any, like the boomer trade in FinPub is over. Like, they have the most money. They are the biggest customer base. We know how to talk to them. We know how to reach them. Like, this is the bread and butter of the market, and that is going to continue for a while here. But over the next 20 years, they become a negligible part of the market, and they are not a growing part of the market, right? The percentage of boomers of that generation who are going to join the market is relatively negligible at this point. Like, we have that market, it's the size that it's going to be, and every year that goes by, it's going to shrink. The churn on that generation will start. So it's a very, very mature demographic. And so there's no immediate problem, though. And like, I'm not trying to say that there's any immediate problem with marketing to that generation. Like, if you stop, you're missing the point. But it's to understand, like, the trend of where everything is going to go is that within 10 years, that they'll be cut in half. And so this is how I'm thinking of the market. And this is, again, I told someone before this, I'm going to say a bunch of stuff and people are going to disagree with me and then we're going to have some really good discussions. But I think that this is what we're looking at is we have a very consolidated, mature market that we know how to talk to. We know how to market to. We know where to find them, what platforms and everything to find them. And then we have a growing but very fractured market of newer customers where there are a lot of opportunities to go dominate a niche right now, which we'll get into a little bit. But it's not exactly the same market. And that means that they're found in different places. The issue is, I think down here, and I use Venn diagrams because there's tons of overlap. Like there's not like a clear delineation. There's a lot of, because investing is psychographic, not just demographic. I think this fractured market, for a lot of people, if you look at the things that are happening on all these other platforms, is almost like what we were like in the 2000s in internet marketing, right? Like the make money online space, right, is one of the major trends of everything online. That's why we have a creator economy. It's so they can make money. You have all this stuff that is how to make money, and you see that there's an explosion in the biz ops space. There wasn't in trader education as making money online. You see new creators all over the place. They're on different platforms, but you can't scale to a lot of those platforms because they're too small, right? So the larger companies, it's not going to be interesting to a bigger company who needs to have a $5, $10, $15 million campaign because while the size of the market, total market might be there, your ability to reach them is way more fractured, right? Because they're on so many different platforms. But like, all investing and trading is inherently information kind of driven, right? Even if the information is terrible and you just heard it from your brother's cousin or girlfriend, right? There's very few people, I should say, not nobody. There are very few casual investors or even hobbyist investors who are not consuming a lot of information in order to do whatever form of investing that they're doing. So if they're engaged in the market, they are consuming information in some form or another, free or paid. And we've seen this explosion of online finance content creators in every format and every channel. They've got like StockTwits is or FinTwits is one of the only areas of Twitter that's really growing. You have podcasts, you have Robinhood's Sherwin Media, right? They're basically doing morning brew for finance. So they're not doing our type of content, but they're putting stuff out. You have the Substack revolution. You have the Beehive, like the whole newsletter platform revolution. You have people like Matt Warder, who's been on my channel. You guys know Matt. He was easily one of the top coal analysts in the world. And there's not a lot of them anymore. But he was the head of the coal division for Wood Mackenzie, which is a $120-some-odd billion institutional research firm. Him and all of his friends are all over Twitter, and they all have Substacks. And you have all these Substacks that are making $500K to $1 million, or other newsletter platforms. And they're giving out or even free, really high-level information, and learning how to talk to retail investors that they haven't done before, which is usually one of the barriers. Like you might have this good analysis, terrible communication. That's evolving. And so we have this explosion of content. So this guy is all Twitter, right? He's got, what is it, I forget, he had like 148,000 followers. He has 1,500 paid subscribers at between $69 a month and $169 a month. So he's doing somewhere between 1 and 3 million probably off of just his Twitter. And you have dozens of these guys on every platform. You have them on Discord, you have them on Twitter, you have them on YouTube, you have them, like, the types of front-end content leading to paid services is exploding, and they're everywhere. And so this is where, like, again, like, look, it's not gonna make sense for a very large publisher to be like, we're gonna really focus on Twitter as our primary strategy. But for a smaller publisher, there is opportunity there. Now, there's a lot of issues with, every platform is unique, and I'm not suggesting that you jump to Twitter, but it's really interesting that you're seeing these guys everywhere. And so what I believe right now is that there are way more audience segments than any one company can target, because each of these generations now are consuming media slightly differently. They're involved in, there's overlap, but the media, the investing behaviors, like, there's much more complexity than we've ever had before in the audience and in the media and in how media is consumed and where people are buying. So I think that, especially for those of you who are not like a scaled up company in terms of being up, pushing to 30 to 50 and above, like, the biggest opportunities are probably niching and positioning right now. And I'll go through a few examples of that. Like, I think identifying high value customer subsets, and there's a lot of ways to do that. That's a bigger conversation, but like, I think there's a huge opportunity there to create interesting, stable businesses that are much more focused than kind of everything that's going on. You know, like, we invest in everything, whatever's hot. Not that that goes away, but I think there's just these other opportunities that are worth exploring. And they can be by media channels, customer segment. Like, you think about it, like, where's Jason Freer? Remember Jim Dines? Oh yeah. Jim Dines is like one of the first newsletter guys ever. You guys published him when he was, what, 90? People were not taking the 2-year option in writing in because I love him, but I just don't know that he's going to be here for 2 years. You're not probably going to sell a lot of younger, like, millennials on a Jim Dines kind of guy, not because he's not a great investor, but because just culturally it's a little bit different. So there's all these different kind of dynamics that are opening up. And so when I talked about the growth of the boomer generation as FinPub customers, like, remember, just a rising tide lifts all ships. We had a growing market in a lot of the channels that were coming online. They were coming online at the same time. And that's a great thing. I just think that the rising tide now is going to increasingly become with a slightly younger generation who is more sophisticated on media, participating in a lot of different channels. You don't have to read all these. I was just listing out, like, how many different versions of funnels can I think of off the top of my head from different channels. Social creators to Discord to paid newsletters. We're seeing SaaS marketing efforts, tools, like a combination of content and tools. You have the full VSL front end for a low ticket. You have full VSL front end to a high ticket. That's very popular now. You've got paid acquisition and lead gen versions of everything. Like, there's an explosion of what everybody's doing. Like, for a while there, it seemed like everybody was using the same model or trying to use the same model. Now, increasingly, when I talk to people, both in the room here and elsewhere, you never know what funnel they're going to use. A lot of the internet marketing community has gone to lead gen to sales floor, high ticket, right? That's a very common model now. And skipping the VSL and just using the sales floor. You're also getting, you know, different types of products, from events and virtual events to, you know, direct investment opportunities. There's an explosion of people who are marketing direct investments. Think Masterworks, but then realize that the rest of that issuer community is doing much more sophisticated marketing and just more media platforms, right? So I love to use Hedgeye as an example here. Everyone familiar with Hedgeye? So, fascinating business. They basically target institutional kind of research level, right? So they have a very specific target market. They are niche content, which is their macro investors, but they pretty much only operate on Twitter. And if you're somebody on Twitter who posts stuff and they think it's stupid, or they think you're, you know, just a pump and dump or whatever, they will viciously go after you. And especially if you have a large audience and they think you're stupid, they are going to come after your audience. And they're like a 30, I think it's hard to be sure. I think they're somewhere in the 30 to 40 million range. Very niche though, because it's very platform dependent, have a very specific investing niche, very specific target market. I think you're going to see more things like this coming. I love Katusa. There you are. not Katusa, but Marin, the other Marin, the two Marins. Phenomenal business, very much a newsletter business, right? We've had them speak before. Marin is one of the best mining analysts anywhere. And not only is one of the best mining analysts anywhere, he actually goes and negotiates deals directly with companies. And so the deals that you can get through his service, you cannot get on the open market. I think at one point, I don't know if this is still true, but like 2/3 of the warrant market in Canada were from Marin's deals. Like the whole warrant market was Marin. And so he has this amazing stack of investors, right? A very, very dedicated following of both retail and institutional investors now who come in. I mean, he did a deal and they pulled in $100 million for the company from his subscribers. How much? 140. Jeez.
300 in demand.
300 in demand. So they had more demand. They raised 140 and the subscribers are trying to raise 300 from a paid community. This is niche. Like if you're coming into mining and trying to compete with Marin, it's very, very difficult, right? On just the pure quality of this. I'm not saying that the market, like people can go out and push when things are hot, but they're doing this in a market when mining is not hot, right? It's not the major trend. They have a very stable, very strong business. And my point is it's again, deep specialization. They're not specializing necessarily by media, to my knowledge, but they are specializing by sector and type of product. And more importantly, well, not just more importantly, one of the nice things is you guys have a very, very high-end backend, like 35K, like Atlas, which again, I think this is the Atlas 400, which is the Porter's kind of, it's 35,000 as well. Very, very high value segment. And if you look at the stability of, if you've been watching MarketWise's earnings reports, like one of the beautiful things about their business, and there's many, is they have this very stable group of ultra high value buyers. And I remember Porter saying one time, he's like, I don't really think you're paying attention to what we're saying until you spent $25,000. Now you're paying attention. And so that idea of like targeting groups, they've done this at scale as a back end. I think that there's opportunities to do what Marin has done, Marin has done, which is have a niche business that targets a very high value segment of the market and create those really expensive back end services. And the engagement on that customer base has got to be through the roof, right? Because they're coming in person. There's like it's the ultimate kind of relationship tool. But it's also changes the economics of your business quite dramatically. And so if you can identify tight niches that have a lot of money that you could market to that level, you're gonna have a very stable business. And one of the things that has happened in the last few years is a lot of businesses had some great, like they're catching the tide as it comes in, then everything really falls apart on the way out because they don't have, they just don't have the stability. And larger companies can in some cases handle it better. They have a very different model. Like you're not gonna, I mean, most of us in the room are not gonna be able to copy what Aaron DeHoog does at Banyan. They're not gonna be able to copy MarketWise directly. Like the running that kind of business is increasingly sophisticated. The competition for copywriters is increasingly sophisticated and difficult. Like it's very difficult. Like if everybody in this room was like, okay, we know exactly how everything that MarketWise does, and we're gonna do the same thing, your chances of replicating it are slim to none. There's constraints there. And so my point with this is like, something I said before, I guess 2 years ago now, that it's time to start to think innovatively about who your audience and what your product model is and your business model. This is the kind of thing, like, just because it's the way that you're set up or you've seen somebody else do it, like, it's time to actually put in like a little more thought as an industry, I think, into what your business model and customer is. One cool area that I want to highlight, just because I think it's amazing, is that both those generations spend a ton of money on travel. Boomers because they're traveling in retirement, and from what I've gathered from some of the studies, the millennial generation is spending on experiences because they're like, we're getting screwed on homes, we're getting screwed on other things. I want to have like good experiences, and like the social kind of platforms really promote like, hey, you can have this great life. Look at the travel stuff. And I remember like the Money Show when they were struggling, they switched to the back end kind of. Remember, Roger, we were talking about this. I know you're the travel cruises, the investing cruises, and that was a big win for them. So Adam's here. He has one of my favorite stories. Here he is, Adam Richardson, raise your hand. Adam did all the marketing for this. How niche can you get? An anarcho-capitalist 25K travel investing club. They would go to emerging markets and look at like coffee farms and do deals for investing in that. And he had a group of members who were like, we're tired of all these guys who could only pay 25K because we can't get better terms because they can't put enough money in the deal. Could we do a 100K a year group just to make sure that it's only really ultra high net worth? Super niche, never scalable, never gonna be scalable. Great little business. So I think like to think creatively about what's possible is, I mean, I guess kind of the point for me. And remember, like, in all these generations, your investor segments, right, because they're the higher net worth, they're the most valuable audiences in the world, right? Like, if you look at, like, the global, like, top 1% of income for the world, it's, like, $50,000 for household income to be top 1% globally. And then these guys are the top of the top for every generation, the people who actually invest. It's the most valuable place in the world, and that's why we're seeing an explosion of other things. BizOp and finance is a thing, right? Like Bridger Pennington, he's a perfect example. Start your fund business, right? As a BizOp. There is plenty of M&A stuff going on, angel investing stuff. We're seeing like that is going to be a bigger trend too. So the way that younger markets engage with finance is going to include BizOp, and people who have credibility and experience and networks and the ability to do stuff here, you're going to find like really high-end customers, right? Especially if you target Gen X, who has the most entrepreneurs, like digital entrepreneurs. Like investing for digital entrepreneurs, like we don't do that in this space, but like if you think about like what's your highest value spenders, there's a lot there, both from the investing side, but then there's a lot there on the BizOp side too, from the marketing world. We're seeing this all over already, and the creating community has really been pushing finance, or being pushed finance. Getting very involved in venture because they started realizing, once they realized that their audiences were product distribution channels, then they realized in retail VC realized that, and by retail I mean retail or consumer product VC, started coming to them and say, hey, like if you get involved with us, we can both raise money off your channel and sell a product for the companies and give it a better chance of making money and you getting a better monetization. So that's a big kind of trend too. And then of course there's just like financial services. So I was just telling somebody this. Adam and I had a TAMP, a turnkey asset management program, come to a small event we did here last January. They have 90 billion to 100 billion on the platform. They were looking to give us $10,000 CPAs for any advisors on our lists. $10,000 CPAs, because they were paying 22 after getting it down from 30. I've interviewed the CEO. It's been this long. Like you realize working with a big corporate non-marketing firm, how slow everything moves. They were like, we can't do this affiliate program until October when our legal team updates our terms and services, and then it's kind of a sketchy market. So it's in limbo. But I interviewed them, did this whole thing. The crazy thing is, they only started digital marketing, and they're like the top, depending on the year, 1 or 2 asset or TAMPs in the world. They only started digital marketing in 21 at all, of any type. And there's a lot of other financial services companies that you're seeing that are just coming online, and that's why you see this like very explosive increase in ad spend. And it's in capital markets too. So I do think that this is the other thing, is that the direct-to-investor media marketing from issuers is just, Reg A, crowdfunding, all that kind of stuff. very explosive. There's Aaron Shafton from Dealmaker back there. Dealmaker they've raised billions on their platform in the Reg A space. They're probably the primary platform in terms of companies raising money. And they work with publishers. They're always looking to find new relationships because there's so much overlap in what all of the capital raise world is doing in what we do. And a lot of you know that I've been doing a lot of small events connecting kind of those worlds. And so now this is crazy when you think about it, there is no marketing conference that focuses on just digital for issuers like that, and that's just like direct to investor. And so that's what I'm doing later this year. Been trying to start a few new things, and that's like the big one for me is that we're gonna do a direct to investor conference like this that just gets that world together. And I wanna finish here with Ian Rosen, who a lot of you know. He's over at Tiffin. He was CEO of StockTwits, GM of MarketWatch. He wrote this just this week, and I'm not talking a huge amount about AI here, but like I think this point is so on point that the marginal cost of production of basically mediocre content or just good enough content has gone to zero, and the explosion of content in a world where we are already struggling to keep attention and grab attention is going to flood the consumer and make it even harder to grab attention. And so that attention, like we arbitrage attention, that's what we do. And so while we're really excited about the productivity gains we're going to get from AI, and we're already seeing, also realize that like from a customer standpoint, it's going to be like, if you think there's too much content now, it's just going to be exponentially more. And there's a lot of not more to this, and I want to steal this thunder on that, but this is going to be a persistent issue too, right? Like how you fight for attention, and so your ability to really build a relationship with prospects right out of the gate is going to become more important, which partly you do by being really well positioned and having a strong focus and niche. Like you're the guy for that. So like anyone familiar with Jim Grant and Grant's Interest Rate Observer? Right. When you think of like who do you go to for interest rates, it's Jim Grant. And he again has retail and institution. He has high-end newsletters, no low ticket. He has expensive in-person events. He has a great business, and he's been there for a very stable business because he's very focused and he's very good at that one thing that he does. And so I was just, frankly, a little bit lost with how to finish. So I got this great quote from Peter Drucker. There's a lot of change, right? That's coming and it's happening. And so I know none of this is really like, hey, there's not a ton of like, hey, go do this with your marketing funnel today. But I really always feel like when I do this open presentation that the biggest thing that I can do is kind of set context of where we kind of are and where things are on a bigger picture, because we have so many amazing marketers, we have so many amazing publishers. Like I have an interesting view of the industry because I do kind of talk to everybody, both across all the segments of this space, like trader education, newsletter publishing, media, the issuer space, the crowdfunding space. Like I talk to everybody and I see just a kind of a different perspective. So I just try to bring like a big picture meta perspective on where we're at. And I thought that might be the most important thing that I could do for context here, coming out of like what again I think is a fundamental shift in size of potential audience and this how COVID was a catalyst for a younger generation to enter the markets in a way that they never have before, and they stayed, and what that kind of implies for us going forward. So with that, I'm going to give it back to...
Applause.
Thanks.